Welcome back to the deep dive.
Great to be here.
Today we're tearing through this huge reading stack on what you could call New Italy.
Exactly.
And I don't mean the guidebook version, the one you see in documentaries.
Not at all. We're looking at the country undergoing these massive, sometimes really contradictory structural changes right now. We're talking everything from ancient laws getting scrapped to completely new real estate priorities.
The mission today is to cut right to the surprising stuff, the little nuggets that really show you how fast Italian life is changing.
And we have some really good ones.
Okay, let's just dive right in then with something that, well, it seems completely counterintuitive for Italy. Wine consumption in restaurants is actually going down.
It is.
And it's because of the new road codes. Stricter rules, much higher fines. It's making people hesitant to even order a glass.
You're seeing it especially in cities like Bologna, where wine is just part of the meal. It's not an extra, it's fundamental. And now people are thinking twice.
So this is a classic case of a public safety measure having these big unintended economic consequences.
Oh, absolutely. For many of these restaurateurs, wine is the margin. It's the difference maker.
It's what keeps the lights on.
Precisely. They're genuinely worried about losing a huge chunk of their revenue because fewer people are willing to risk a breathalyzer on the way home, even if they've only had a glass or two.
So what's the fix? I mean, does everyone just start ordering water with their pasta?
Well, not quite. We're seeing some pretty creative workarounds. The main one is this take-home wine option.
Okay.
So restaurants are encouraging you, buy the bottle, enjoy a glass, and then they'll recork it for you to take the rest home.
That's pretty smart, actually.
It's a compromise. It tries to balance the new rules with that deep cultural need to have vino at the table.
It's a fascinating micro example of adaptation. But speaking of massive cultural shifts, let's go from the dining table to the home, because the real estate market is going through a huge psychological change.
It really is.
Homeownership, that central pillar of Italian life. It's just not the main goal for everyone anymore.
That whole traditional blueprint is fragmenting. The one where you get a secure job, you buy a home, then you start a family.
Right.
And look, Italy still has a very high home ownership rate overall. But the direction of travel is clear. The rental market now covers 30% of households.
30%, and that's up from, about 20% a decade ago?
Exactly, a 10-point jump. But here's the really important part. Almost half of those tenants, 43.8%, say they choose to rent for flexibility.
For their lifestyle, for their career.
They're not renting because they can't buy. They're renting because they want to.
And that huge surge in demand is creating a paradox because the supply just isn't there.
Not at all. Which is why rental prices have just soared. We're talking an average of 20% since the pandemic.
Wow. And it's different depending on the city, right?
Very different. Milan is still the most expensive, nearly 1,300 euros a month. But prices there are actually dropping a tiny bit. Maybe they've hit a ceiling.
Okay, so what about Rome?
Rome is surging, up 13%, closing in on 1,000 euros a month. And a lot of that is being attributed to the Jubilee effect.
Right, the 2025 Holy Year, all the investment and construction.
It's driving up demand for short-term rentals, which pulls properties off the long-term market and pushes prices up for residents.
And if we're talking short-term, we have to talk about Airbnb. The numbers are just staggering.
They are. 754,000 listings across the country. That's up 52% since 2017. It's an 8.8 billion euro business this year.
So where's that growth happening? Is it all Rome, Milan, Florence?
You'd think so, but the really explosive growth is in the south. In places like Bari and Palermo, listings have gone up by over 230%.
230%. That's a transformation.
It's a fire hose of capital aimed directly at tourism, and it's completely reshaping those cities. But this leads us to maybe the most shocking number in all our research today.
Go on.
Amid this huge rental crisis, with prices skyrocketing, nearly 30% of Italy's residential properties are empty.
Wait, 30%?
9.5 million homes, just sitting there, unoccupied.
That's a staggering disconnect, a huge structural failure. We have to come back to that. But for now, let's look at where the smart money is going. There are some really specific trends.
There are. First, energy efficiency is everything. The most traded luxury homes are now Class A1. Green is the new gold.
And second, this rise in, nuda proprietary.
Bare ownership, yeah. Transactions are up 20%.
So explain that. You buy the property.
But the person who sells it to you keeps the right to live there until they pass away. It's a way for older people to cash in on their main asset without having to move. It's driven by demographics.
But that seems like a really niche long-term investment. Is this just for, like, big investment funds?
It's definitely specialized, but the growth shows there's real interest. It's perfect for investors, pension funds, maybe, who want a stable asset with a low entry cost and aren't in a hurry.
And speaking of investors, what about the international ones?
Oh, there's been a huge influx, especially from the UK, since they got rid of their non-dom tax status.
Right. So Italy's flat tax regime from 2017 suddenly looks very attractive.
Extremely. And it's bringing a lot of ultra-wealthy individuals into the country, particularly Milan. It's another sign of international capital targeting very specific high-end markets in Italy.
Okay, let's shift from property to people, from real estate to the labor market. Because if the story in housing is about flexibility, the story in work seems to be about disparity.
Stagnation and disparity. That's it, exactly. The average gross salary was around 37,000 euros in 2022. But that number, that average, it basically dissolves the second you look closer.
It's almost meaningless, right? Because women earn over 6,000 euros a year less than men.
A huge gap. And it gets worse the higher up you go. Among managers, the gap is over 30%.
30%. And even among graduates, it's still over 16%. That's not just a yearly difference, that's a lifetime of lost earnings and retirement security.
And the age gap is just as stark. If you're under 30, you're earning over 36% less than someone over 50.
36%.
And if you're on a fixed-term contract, you're earning almost 25% less than a permanent worker. So just connect those dots for a second.
Okay.
You're 28, you're on a temporary contract, you're earning a third less than your older colleague. How are you supposed to handle a 20% rent hike? It's a pressure cooker.
It really is. And the sector you work in just bakes in that inequality. Finance pays nearly 26 euros an hour, while hospitality pays less than 11.
It's a system with deep, persistent wage gaps.
But,
Yeah, and this is a really big but. There is a powerful counter-narrative here.
and that is,
Immigrant entrepreneurship. It's exploding. It's a story of incredible resilience.
okay, give us the numbers.
Over the last decade, the total number of Italian businesses actually went down by 1.7%. But businesses led by immigrants, they surged by almost 33%.
Wow.
We're talking over 659,000 businesses now. And they're not just small shops. The number of proper joint stock companies led by immigrants grew by 160%. That shows serious investment.
So these are highly qualified people filling real gaps in the economy.
Absolutely. The biggest growth is in sectors like accommodation and food services, no surprise there, but also in professional and technical services and even healthcare, which is up over 77%.
So it's a really dynamic part of the economy.
It is, and it connects directly to the future of work. I'm
Yeah.
talking about the green transition.
Right, because the demand for green skills is soaring.
Soaring. Over 80% of all planned hires for this year require some kind of green expertise. Sustainability, efficiency, environmental knowledge.
But we don't have the people for those jobs.
That's the problem. Almost half of those roles, 49.4%, are considered difficult to fill. There's a massive skills gap. The economy wants to go green, but the workforce hasn't caught up yet.
That's a huge challenge. Okay, speaking of dealing with old problems, let's pivot to governance. There's a plan to repeal 30,000 old laws, all at once.
30,000. It sounds crazy, but it's more than just spring cleaning. It is essential.
So why? What's the point?
Well, a lot of these laws are from before the Republic. We're talking about royal decrees, even laws from the fascist era.
Stuff based on a legal system that doesn't even exist anymore.
Exactly. They're based on the old Albertine statute, not the modern Constitution. So imagine you're a local official trying to approve a building permit, and you're tied up by some irrelevant royal decree from 1912. It just creates endless bureaucracy.
So this is about modernizing the entire operating system of the state.
That's a perfect way to put it. And if the government is cleaning up the legal system, how is the financial system looking for the average person?
Let's talk consumer credit. That market grew over 5% last year. But what stands out to you in this data?
The cost. The cost of borrowing is just really high.
Higher than the rest of Europe?
Significantly higher. The average APR on a consumer loan in Italy is 10.45%. The Eurozone average is 8.38.
That's a big difference. Why is that?
It could be a lot of things. Bank inefficiencies, maybe higher perceived risk. What's interesting is that the actual risk of families defaulting on loans has been going down steadily, but the high costs remain.
And there's a north-south divide there too, I assume?
Yes, the difficulties with loan repayments are still concentrated in the south, in Sicily, Campania, Calabria.
So stability is improving, but the cost of money is a major hurdle. Okay, let's quickly touch on two huge markets where all that money is flowing. First, e-commerce.
On track to hit 62 billion euros next year. And the growth is being led by groceries and beauty products.
And shoppers are doing their homework. The data says they consult 4 different touch points before buying anything.
They're very informed. But at the same time, people still want that face-to-face interaction, which is why the meetings industry is booming.
Conferences, corporate events.
It's an almost 12 billion euro industry,
Yeah.
attracting 27 million people a year. And those people spend, on average, 281 euros a day. It's a huge economic engine, especially for cities like Rome.
Okay, to wrap this all up, let's end on a really positive note. Sustainability. Because this is an area where Italy is genuinely a world leader.
It really is. Its carbon intensity, the amount of co-euros produced per dollar of GDP, is incredibly low.
How low?
It's about a third lower than the G20 average, and literally half that of the United States. It shows a very efficient economy, one that's decoupled growth from emissions pretty effectively.
And you can see that on the ground, right? With things like the Plastic Free Towns initiative.
122 of them now.
Oh.
Abruzzo is leading the way. But the really big one is geothermal energy.
Tuscany.
Tuscany is Europe's leader, hands down. It produces enough geothermal electricity to power 30% of the entire region.
Wow. And the potential is even bigger.
The potential is continental. The sources say that if Europe fully exploited its geothermal resources, it could cover 75% of the continent's heating and cooling needs by 2040.
That is a staggering thought. And it's anchored in Italian expertise.
It is.
So to synthesize all this, what a picture. We have a country balancing these deep traditions like wine with incredibly rapid change, flexibility over ownership, immense entrepreneurial energy.
Alongside really stark wage inequality. And all of it happening while the state is trying to modernize itself and the economy is demanding a green workforce it doesn't have yet. It's a vibrant, contradictory, fascinating duality.
It really is. So what does this all mean for you, the person listening? We started with that central, baffling paradox. Italy has 9.5 million empty homes.
30% of its housing stock.
Right. And at the same time, a desperate rental crisis.
Yeah.
Now, we also talked about the government's huge push to repeal 30,000 outdated laws, many of which are ancient, complex property and zoning codes.
Right.
So it raises a question, doesn't it? Could the key to solving the housing crisis be found inside that legal cleanup? What if the single most effective action would be to focus that legislative bonfire specifically on those archaic urban planning codes to finally unlock that 30% of unused home, something to mull over until our next deep dive.